Hey, what's up YouTube? On this video, we're going to talk about one of the most important things that you can do when you're investing is the whole purpose of investing. We're going to talk about in this video. Like, you don't invest just to accumulate a bunch of money. You invest such that at some point in your life, you're going to be able to distribute from that accumulation and live comfortably in retirement, or live comfortably in a way that you don't have to work anymore. So in this video, we're going to talk about your exit strategy. We're going to talk about what that means and how to build one. And in the spirit of Stephen Covey, we're going to talk about how to begin with the end in mind. What's your exit strategy? Have you started investing already? Did you begin with the end in mind when you began your investment journey? If you did, put in the comments below, what did you do and what are you doing right now to make sure that you're on course to hit your goals financially? So my name is Cluff. I love helping people manage, protect, and grow their money. And in this video, we're going to talk about what do you do after you've grown a large amount of money, and how do you distribute that money back to you so that you can, one, retire, or two, if you pass away, how you can transfer that to the next generation without a ton of tax problems, and making sure that you have the appropriate liquidity to have that asset continue to pay you money until you pass away. And then when you do pass away, you definitely want to figure out how to approach the transfer. So there's 4 real stages to this. The first stage of any investment is to have, the first stage is contribution. So what you're putting into it. The second phase is accumulation as it's growing. So if it's the stock market, it's what's the rate of return you're getting? How is it growing? Is it growing tax deferred, tax free, tax advantaged, taxable? You know, how is it growing? Then next one is distribution. So when you accumulate this large asset with, and let's say it's a business, let's say you've worked diligently, you've contributed, you've worked hard, you've grown a business to the point where it's worth millions, you can sell it. Now, when you do sell it, there's a couple things to think about. That's the accumulation. Now the distribution, how do you distribute a business that's assets? If you've got a business that's got brick and mortar, you're gonna have to sell that thing. And if you're gonna sell it, how are you gonna sell it appropriately so that you don't have a huge tax burden? Because if you make a sale in 1 year, the IRS, Medicare, Social Security, like all those people know that you made a ton of money that year, and they're gonna come after you for some of that money because the tax burden is huge. When you make millions of dollars in 1 year, the tax burden is huge. But what if you could take that sale of that business and you could spread it out over 5 or 10 years, the dollar amount coming back to you, and have a nice, strong, solid income, continue to have a nice, good, strong lifestyle, but not have to worry about having a super huge tax burden. That's beginning with the end in mind. And there's teams of lawyers and CPAs and financial professionals that can help you structure the sale of a business in a way that you're not going to have a huge tax burden. It becomes very liquid for you to be able to then take the cash and live comfortably. Now, the 3 main areas to invest are stock market, real estate, and business. We've talked about stock market exit strategies. And the FIRE movement has really kind of defined, the fact that you can retire not at an age, but at a dollar amount. So when you accumulate a certain dollar amount, you could actually retire. You can live comfortably on whatever that dollar amount is you've accumulated. That's usually traditionally a stock market mentality. Like, I'm going to invest in the S&P 500. I'm going to invest until I have, 1 million, 1.5 million. And then I'm going to live off of the interest, or I'm going to live off the dividends from that portfolio. Well, when you live off the dividends of that portfolio, what's your exit strategy? Do you know how much the dividends are going to be? Do you need to transfer some of the stocks into dividend stocks? Because maybe you were in a portfolio that wasn't dividend heavy, but now you need to be. So you need to figure out, what is your real exit strategy going to be? The other thing is, are you growing that money in a tax advantage, tax deferred, or tax free or taxable location? Because if you're putting that money, if you're accumulating money to retire early in a 401k or an IRA, or even a Roth IRA, you're in the wrong vehicle. You actually chose the wrong vehicle to retire early, because there's penalties and fees if you retire before 60 years old, or 59 and a half actually, in all of those vehicles. Roth IRA, there's a little different nuance to that, but you still have penalties if you pull money out before 59 and a half. So you have a goal. Let's say you have a goal, you're 20 years old right now, you're like, man, I love the FIRE movement, I'm gonna retire when I'm 40. Well, the exit strategy of retiring at 40 will determine the things you should be investing in right now. Make sure that you're investing in things that will allow you to retire at 40 and pull and distribute an income off of your asset in such a way that you're not going to have huge penalties or taxes. So if you're building a real estate portfolio, you can have a ton of write-offs as you're depreciating that real estate. Those write-offs, when you sell, you're going to have, they can come all right back, all the tax is come right back to you when you sell that real estate. So make sure you have a appropriate exit strategy. If you're going to build a large real estate portfolio, you're going to make sure that you're going to, what's your exit strategy? Are you going to build a portfolio and then just have a passive income and then hire somebody to manage that for you in your retirement years? And then when you pass away, you're going to figure out, you got to figure out how that asset's going to transfer to the next generation. Does the next generation want the real estate? Would they rather have the cash? If you sell that, all those properties, you're going to have a tax burden now. Like, so are you working with a CPA and a lawyer and establishing trusts and other things that are going to help you make sure that when you do sell those assets, it's not going to be a huge tax burden on your family and on your estate. Part of your planning for your future, when you're choosing an investment, whether it's a stock market, whether it's a real estate, or whether it's a business, when you're choosing to do that, realize that at some point you may want to or need to sell that asset. And then what is that going to do for you? What's that going to do for your taxes? What's that going to do for your family? And if you died, then what's that exit strategy? What if you died early? What if you died before retirement? What if your goal was to retire, you're 20, your goal is to retire at 40 and you die at 30 in a car accident? Do you have a plan for something like that? Like an emergency exit strategy, you might call it. So have an exit strategy for what the goal is, what you plan to do, assuming you live a great, wonderful life, but also have some contingencies in there just in case, because you don't want to miss that. I think another important thing for a business owner, right now there's a lot of baby boomers that are trying to sell their businesses. They've built wonderful, lucrative businesses, cash flowing businesses that they were hoping to be able to transfer, and many of them were hoping to transfer to their kids, their grandkids, and their kids and grandkids don't want to have anything to do with the business anymore. So if they ever did. And so they're trying to figure out, well, I thought I was going to transfer this to my children and they don't want it. What am I going to do now? So the goal is for them is to figure out a way to sell the business to a buyer and do it in a way that they're not going to have a huge tax burden. There's business owners right now that if they don't plan properly and they sell their business for millions of dollars are going to have a huge tax burden, because that's going to throw them into a huge tax bracket. There's a lot of different things that you can do to really structure the sale of a business such that the tax burden is not going to be huge or be overburdensome on you and your family and your estate. The biggest thing here is that when you build a business, at some point you're going to want to walk away from that. And so you're going to want to be able to sell it and have enough cash to have that cash then be invested in such a way that the cash continues to last as well. So that's another part of the exit strategy. If we sell the business and we take the cash, where are we going to put the cash to make sure we have an income for the rest of our life? If we sell real estate, and real estate's really good because real estate can usually give you a passive income, and you can usually hire a property management company to do the day-to-day work, and you can kind of retire and then you don't have to worry about it. So real estate's a little different. But that's part of having an exit strategy. If you know that real estate does that and that's what you'd rather have, then start investing in real estate today, because the exit strategy is more in line with what you want down the road. If what you want down the road is nothing to do with properties and property managers, and you want nothing to do with businesses, then you're going to want to build a huge stock portfolio. And if you want to retire early, don't put it in a 401k or an IRA or a Roth IRA, or recognize that those are if that's what you're going to do, you're going to have to wait till 60 to be able to pull that money without any penalties. So I hope that it's important, you recognize how important it is to have an exit strategy. I hope that you're taking time every day to turn your income into wealth and build a massive bank account. Have a great day, and we'll see you on the next one.